Well, as the Greek crisis has reached a significant new stage, that's the verdict that we're getting from the latest Ernst Young Eurozone forecast, saying a restructuring of Greek debt is pretty much unavoidable at this stage. But far from being bad news, the report says it'll allow Eurozone GDP to grow more than previously thought this year. It's revised its prediction up from 1.7 to 2%. That is, unless contagion can't be contained. In that case, it says, Eurozone GDP would fall sharply, raising questions about whether the monetary union can indeed continue in its current form. But at least prices won't complicate matters much, because it expects Eurozone inflation to fall back below 2% at the beginning of next year. I want to talk about all those findings in more detail now, and indeed the outlook for Greece. Maryam Diron, as economic advisor for the Ernst Young Eurozone forecast, joins me now. Actually, I wanted to start by asking you that point on inflation falling back pretty much to the ECB's target of 2%. What's behind that forecast?
It's simply really taking into account what has pushed up inflation this year, which has been very much VAT, commodity prices and some VAT, and that's falling out of the equations really next year. And the underlying inflation pressures are very low at the moment.
Okay, so essentially the price of oil is going to come down. Why is that? Is that demand driven?
I just said we're seeing a slowdown throughout the world, really, whether it's in the US, emerging markets, and Europe. And so demand pressures will come down, while supply, we hope, will come back in line.
Okay, so when we look at what your expectations are for Greece, you're saying that there will be an orderly restructuring along with an additional bailout that will prevent a full-scale financial shock or sort of crisis in the markets.
Yeah, that's what we hope will happen, because the alternative is just really horrible. In the alternative case, where no agreement is reached and we get through a messy restructuring, then we're seeing the Eurozone falling back into recession, probably as deep as what we saw in 2008, 2009. So we think that when we are against the wall, we'll see EU governments coming together, a bit like what we saw on Friday last week. Okay. We had France and Germany coming together, a bit of a setback now today, no decision taken.
Exactly. I mean, how big a risk is there of that no agreement scenario that you mentioned, and things, even though the plan is for something more orderly and more controlled, of it actually getting out of control? Because it seems as though each time there's a new phase in the crisis, it's sort of allowed to deteriorate, and then EU policymakers sort of step in at the 11th hour. But right now, again, we have deadlock.
It's been very much the pattern that we always seem to go to the brink of collapse, and then we kind of get back a bit. And so I think what happened really is that there was an agreement in principle, but then there are a lot of details to be ironed out, and these details will take time. So we'll probably see only an agreement in July. But hopefully we'll see these agreements coming through. That is, though, what prevents the Eurozone from bouncing back much more strongly than we would have expected otherwise, and that's why we're only seeing growth at 2%.
And what about the risks of an orderly restructuring process? I'm thinking about the impact it'll have on the banks, given their holdings in sovereign debt.
We are a bit in uncharted territory, and, well, so far we still don't know what this restructuring will look like. It will be voluntary, we're told, but then what does it mean if it's voluntary? How many banks are going to take part? What we know is that there is a lot of exposure, not only from Greek banks, but from banks in Germany and France. Not something that we think is threatening. They have the capital that is needed to really face a shock on this. Yeah, exactly. So we think that should be contained. The big issue would be if contagion goes from Greece to Portugal and then Spain, and then from Spain then to Germany and France. Then that's a much bigger risk.
Just a very quick one on how difficult will it be to get a voluntary rollover of debt? What France and Germany agreed to on Friday.
I think it's in everyone's interest for this to happen in orderly fashion. So I think there'll be some negotiations behind the scene between governments and banks for it to happen in an orderly fashion.
Very good. Thanks very much. Maryam Nemazee of Ernst Young. Good to talk to you. Thanks for coming in.